Take a look at your market news now. Asian stocks stumbled this morning, erasing earlier gains after China posted its weakest growth in nearly 3 decades. That's countering a global lift in sentiment on the UK and European Union striking a long-awaited Brexit deal. But the Brexit boost that helped markets on Thursday looks to have faded, with shares in Europe expected to open lower. China's economy grew 6% in the third quarter, less than expected, and the weakest pace in at least 27 and a half years as the Sino-US trade war hit demand at home and abroad. Japan's Nikkei is up 0.2%, closing at 22,492 points. The Shanghai Composite wasn't in a good space, however, as it fell 1.3% to 2,938 points. The Hang Seng in Hong Kong is up 0.5%. Wall Street advanced last night as investor sentiment was buoyed by a string of corporate earnings beats and encouraging geopolitical developments. The Dow Jones Industrial Average rose 0.1% to 27,025, while the S&P 500 gained 0.3% to 2,998 points, and the Nasdaq Composite added 0.4% to 8,156 points. Let's get more on the markets now. Arabile Gumede standing by the Johannesburg Stock Exchange. Very good afternoon to you, Arabile. What's moving markets this afternoon?
It certainly has been talk around that China-US trade deal. Of course, that's come through throughout the week. We saw growth figures and even industrial numbers coming out of China as well, and those have certainly been a key factor for the market. 6% is the number to have come out then for the third quarter GDP. Of course, you'll remember the slide coming through from 6.2% was the growth figure initially in the second quarter. We saw that now in the third quarter hit 6% according to the Bureau of Statistics there in China. So certainly a slowdown in that economy, making it then the worst pace with regards to economic growth for China in 27 and a half years. It just feels like it keeps on getting worse for them. Of course, yes, comparing apples and bananas perhaps with South Africa, whereas growth wouldn't necessarily be at levels such as those. But let's consider as well that government did say that they have a range for growth at this point in time, between 6 and 6.5%, an average for growth throughout this year. It does feel that it will certainly be in between that mark, but with a sliding scale, it certainly could be a whole lot worse. So markets really taking a whole lot of that in. Any further slowdown, of course, in that economy may mean the rest of the world gets a big jolt, and who knows, a global recession may indeed be on the way. So we'll certainly see how things fare on that front. At the same time, we've of course gotten an approval then by the EU of the Brexit deal that Boris Johnson, the Prime Minister of the UK, has put on the table. So perhaps that will also buoy the market quite a bit, and we'll continue to unpack just the detail that comes with it. And of course, tomorrow he now has to ensure that that deal goes through in Parliament, otherwise he has to postpone again. Let's see what all of that has done to the numbers out in Europe in the trading desk, and we'll come back and unpack it in detail in just a bit. Well, some joy coming through then, as you can tell from the local currency market as well then, so we certainly are enjoying that figure. Let's take a look at it now and unpack it a little bit more. We are joined live here at the Johannesburg Stock Exchange by Warwick Lucas then from Galileo Capital, who joins us. Warwick, thank you so much for the time, really appreciate it. So some joy perhaps for the local currency, just in general. I suppose that picture could be bettered by the fact that China certainly didn't get the best growth numbers, but South Africa's currency remaining resilient by the seams of things.
Yeah, I think that the perceptions of a deal finally coming together very positive for South Africa in that sense. We're at the tail end of a lot of these events, whether we like it or not. I mean, whether it's a trade deal, we're a commodity economy. China's an incredibly important customer, and then of course the likes of Brexit, another dog that we're a tail on, because of course they're a massive trading partner of South Africa, disproportionately so. So seeing some certainty there, very important for us as well.
3 years, 3 months, and a couple of days. That's how long it's pretty much taken from the moment they applied the referendum right through to today. But the final stamp in the deal, if you want to call it that, would definitely be the UK Parliament voting on it. How important is that then for the market to continue in a buoyant mood, if I can call it that, for that to actually go through?
Right, so I think it's very important. The difficulty is, what are they actually voting on, and how many different agendas are they voting on? Of course, Remainers are basically still going to say, well, we won't have any truck with this, and they'll pull in one direction. Purists, I think, seem to have pretty much come around to the conclusion that, well, some deal just gets the show on the road, so that lot's consolidated, but it still has been an enormous exercise in trying to herd cats. There is a very real risk that the British Parliament turns it down, in which case the key determinant then is for it to get thrown back to the EU, and for the EU to say, well, will we grant an extension, or will they basically play poker and say, well, sorry, no extension. Now, this is what Barnier is trying to imply there, is no extension, but it's very important then for the no extension rule to be thrown back at the British Parliament, and for them to decide, well, actually we'll take the deal or we'll take a hard exit. So there's a whole bunch of coin flips that still have to work through here.
Yeah, certainly going to be an interesting one, and look, we'll certainly be watching with bated breath tomorrow as well, as Boris Johnson tackles the old Parliament there out in the UK. China then coming out with a growth figure, 6%, not necessarily the greatest number, and it really shows how the trade war has really impacted their economy.
Well, I'm sure South Africa could do with 6% here or there.
Yes.
Look, the history of Chinese economic growth has been a substantial proportion of demographics. I mean, they've had extraordinary demographics. First, from the 60s, a huge population growth, and then from the 80s, a one-child family policy, and the result was an economic growth dream, which is now slowly fizzling out, because what they've been given by those demographics, they will start taking away over time. Nevertheless, 6% on a very big economy is quite a growth number. I mean, we would expect at the end of the next decade for that growth figure to be down at 4% and falling. So it's an ongoing process that's happening here.
Yeah, and I guess they're trying to find ways to perhaps diversify their economy, change the way they become as an economy, not just consumption-based, right, but now producer-based as well, really trying to create a whole lot more than they used to in the past.
That, and very much a services type economy, and we can see it in the likes of Baidu, Tencent, Alibaba and so on. The services side, the intellectual property side of that economy is actually really, really big, and it's growing, and it's very, very capable. But it also points towards why there's some strong sticking points in relation to those trade negotiations, and that the US is absolutely determined to see IP protection coming through.
Yeah. Is the Brent crude price pretty much stable at around $60 a barrel? Is that sort of the median price we're expecting that for, I suppose, the medium term?
It seems to be. I mean, look, there's still a little bit of growth around. There's on the other hand, a lot of inventory in the US. It seems more or less to be in balance to me.
Yeah, fantastic. Warwick, thank you so much for the time. Really appreciate it. The JSE still on track then for a weekly gain, although it is down around 0.2% then. So some weakness still filtering through on that front. Overall, perhaps that Chinese growth figure certainly playing some part in all of that. Where exactly it'll end up, of course, we'll continue to let you know right here on SABC News, but we continue to unpack the day's biggest news and the agenda. Of course, we continue to give you more economic news as well right after the short break. Do stay tuned. This is On Point, and that's where the buck stops from me. It's back to Nzinga right after this.